I think Bitcoin's found the bottom. I think the leverage is out of it. I think we're on a bull run. The entire world is confused about what happens next. So continual education, communication, and interpretation of all the activities in the finance markets, and especially the crypto markets in every country in the world, is what keeps me up at night.
Jay, that you and the Federal Reserve took through the use of your liquidity tools, including the creation of the Bank Term Funding Program. However, in deploying these liquidity tools, that has come at, against this backdrop where the preeminent monetary policy concern is high inflation. And that's, of course, a little different from some of the earlier episodes, and has raised renewed discussions about the so-called separation principle, right? And so I wanted to ask you how you think about the use of financial stability tools and liquidity tools as opposed to more traditional monetary policy tools and how they fit together.
It's an interesting question, but I want to start by saying, though, that the overall, the banks and the banking system are strong and resilient and well-positioned to deal with the challenges they may face now or in the future. So, as you pointed out, we do have separate tools: monetary policy to achieve our macroeconomic objectives, liquidity, supervisory, and regulatory tools to address financial stability issues. But I see an important distinction between separation, this is the separation principle, separation and independence. Our tools can have separate objectives, but their effects are often not entirely independent. So the tools are complementary almost all of the time because financial and macroeconomic stability are so deeply intertwined. In fact, our consensus statement notes that sustainably achieving maximum employment and price stability depends on a stable financial system. So because they're so intertwined, to me, there is not likely to be an absolute and complete separation of the tools, nor is that possible or desirable. And I think as Ben's research and the global financial crisis demonstrated, financial stability affects macroeconomic stability and vice versa. We saw that clearly at the outset of the pandemic. As a result, the tools that we use to address concerns in either arena can and will affect both, especially during extreme circumstances. That said, yes, the tools are separate, they have individual purposes, and most of the time each can be used for its intended purpose without compromising the other. For example, as you pointed out, when banking stresses emerged in early March, we used our liquidity tools, the discount window and the Bank Term Funding Program, to make liquidity available to banks that might need it. And that liquidity supported the stability of the financial system without restricting the use of our monetary policy tools to promote price stability. While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Michael Saylor saying Bitcoin has found a bottom and we're on a bull run. And we know he's been a spokesperson for Bitcoin with the help of Morgan Stanley. But guys, we know we haven't hit a bottom yet, and we're definitely not on a bull run. The reason why is because we know the Fed is not finished. What did Jerome Powell say today? Our banks are looking good. And guys, we know better. We know we have interest rates high. And there's no way these small banks and small businesses are going to be able to survive. But remember, guys, this is all about the fourth industrial revolution. And we had Jerome Powell in the House along with Bernanke. And we see Jerome Powell had his little paper for his talking points. But guys, we know this is all about the fourth industrial revolution. They have to destroy this legacy market in order for this digital transformation to rise. They don't want people employed. They want the machines to come in and take over. And if the masses stay asleep, they'll be able to get to their goal. And by the time the sheep wake up, the machine would have already taken over. Remember, the machines now have money. Remember, crypto means hidden message, hidden meaning. This money is for the robots, algorithms, and drones. And where is the fourth industrial revolution going to rise? That's right, in the emerging markets. And where do we see Ripple XRP? That's right, in the emerging markets. Stellar Network, Cardano, All of them are over in the emerging markets because they know the plan. The fall of America to Babylon, along with the United States world reserve currency, and the rise of the BRICS nations led by China the Dragon, with that digital yuan backed by that digital SDR. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Right now, we have several clients. We've announced 4. Today, actually, in parallel with this announcement, we announced that we're working with the HKMA in Hong Kong on building out a real estate tokenization platform with CBC. We also have 3 other projects, one with the Central Bank of Montenegro, and then 2 others. One is with the Central Bank, the Royal Monetary Authority in Bhutan, and then the final is with Palau, which is a republic. It doesn't have actually a central bank, so they're having. We're working with them to issue a government-issued stablecoin.
You just mentioned 4 jurisdictions that are very different from each other. Talk to me a little bit about why you're choosing to work with these governments first.
Well, as I said, we are working with some of those that we can't talk about yet. But generally, we find that a lot of the smaller countries are a bit more nimble and are able to do things more quickly. Probably the opposite end of the spectrum is, the European Central Bank, the Eurozone, or the US, where it's a very complex environment, a lot of different vested, interested parties, regulatory uncertainty in some cases. So some other countries, the countries I mentioned, are able to move more quickly, and that is great for us because it gives us great experience, early on in this marketplace, and it's also great for those countries as well.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Crypto teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, BitChute, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tang goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.